Hi there, welcome once again to Dukascopy TV. I'm Ben Jones. On the line to give an update on the Japanese economy is Jonathan Buss from Oxford Economics. So Jonathan, there are so many factors for Japan to take into consideration when trying to find ways to grow. One of these is external demand. Japan has an opportunity to take advantage of China's rebalancing. However, do you think poor relations between the two nations could hinder economic benefits?
Well, although a lot of the recent commentary on China has been rather gloomy, the Chinese market still represents a major opportunity for manufacturers in the region, and especially for exporters of consumer goods. Despite the recent slowdown in economic growth in China, wages there are still rising very rapidly, and the emergence of a substantial Chinese middle class over the next couple of decades will constitute a major source of global demand. In principle, Japan should be very well placed to take advantage of these developments, but I think there are two key risks to this outlook. In the short term, the major threat to China-Japan trade is the risk of a much more abrupt slowdown in economic growth in China. If the rebalancing in China were to proceed in a disorderly manner, or if some of the risks in the Chinese financial system were to materialize, then the economic fallout would probably push Japan's already fragile economy into recession. In the longer term, however, the key risk, as you mentioned, is poor political relations between the two nations. In order to see the potential economic dangers from this, we simply need to look back to late 2012, when political tensions around the disputed Senkaku Diaoyu Islands in the East China Sea led to a wave of Chinese boycotts of Japanese goods. This hit Japanese exporters very hard and helped prolong the recession in Japan at the time. If such events were to occur, then much of the potential gains from China-Japan trade would potentially be lost. However, I am fairly optimistic on this front. Although the leaders in both nations have been taking an increasingly tough rhetorical stance against each other, and despite the occasional brief disputes like that which occurred in 2012, the reality is that the two countries are increasingly interdependent economically. Indeed, in economic terms, China needs Japan just as much as Japan needs China, with China's own export sector dependent on imports of intermediate goods and components from Japan. So good economic relations are in both countries' interests in the long term.
Now, many analysts are saying that there's no chance for Japan to reach their inflation goal of 2% by the next fiscal year. Do you agree with this, and what do you see happening with the inflation release on Friday?
One important thing to bear in mind when looking at Japanese inflation is that the Bank of Japan's 2% inflation target is excluding the effect of sales tax increases. So although core inflation was around 3% in August, actually when you strip out the temporary impact of April's sales tax hike, it's only really around 1%, so still some way below the 2% target. And going forward, I think it's actually highly unlikely that the Bank of Japan will be able to achieve its 2% target, either next fiscal year or indeed further out. There are two things that Japan needs to do to achieve its inflation target. Firstly, boost wage growth, and secondly, raise inflation expectations. However, despite aggressive monetary easing, progress on both of these fronts has been insufficient. Although the labour market is quite tight, wage growth remains too weak to support 2% inflation. And various measures of inflation expectations suggest that consumers, firms and the financial markets all expect inflation to settle at around 1% in the medium term. Furthermore, boosting wages and inflation expectations will be even harder now that the economy is slowing in response to fiscal tightening. The inflation release on Friday is therefore likely to see headline inflation continuing to moderate as the temporary tax effect falls out of the data, while inflation stripped of the tax effect will remain stuck at around 1%. If the Bank of Japan is serious about meeting its inflation target, it may have to be even more aggressive with its asset purchases.
And finally, the unemployment rate is also released on Friday. This is an area that Japan seems to be able to control. However, do you see the figure getting much lower than 3.5%? And what else is vital for the economy at the moment?
The low unemployment rate is indeed the one notable bright spot in the economy. However, I think it's unlikely to fall much further, and in fact is more likely to start rising again over the next couple of years. Labour supply trends are very strong, with women entering the labour force at record rates, but growth is likely to be slow in the next few quarters as fiscal tightening weighs on the economy, meaning job creation may not be rapid enough to absorb these new entrants to the workforce. I think the absolutely critical issue for the Japanese economy at the moment is whether or not the government presses ahead with the second sales tax hike, currently scheduled for October 2015. The government has said that it will decide by the end of the year whether to proceed with this second hike. I think it is highly likely that the government will indeed go ahead, given the need to stabilise the fiscal situation and given how much of its credibility the government has staked on its fiscal plans. However, given the unexpectedly severe fallout from the first tax increase, there is quite a strong case for delaying the second hike until the economy is sufficiently strong to be able to withstand it.
Jonathan, once again, thank you for joining us. And thank you for watching. Keep clicking back to Dukascopy TV for plenty more updates and exclusive interviews. Bye for now.